Hello and welcome back to the Bright Path Estate Planning channel. If you're dealing with the estate of a loved one, you've probably heard people mention inheritance tax forms and thought, where do I even begin? For many executors and administrators, inheritance tax paperwork can feel like one of the most overwhelming parts of the probate process. There are forms, valuations, deadlines, allowances, exemptions, and often a lot of unfamiliar terminology. The good news is that once you understand the information which is required and why, the process becomes much more manageable. In today's video, I'm going to explain why inheritance tax forms are required, what information you'll need to gather, the most common inheritance tax forms, allowances and exemptions that might be available, common mistakes to avoid, practical tips to make the process easier. Before a probate application can usually be made, information must be provided about the value of the estate. This allows HMRC to understand what assets the deceased owned, what debts they had, whether inheritance tax might be payable, whether any exemptions or reliefs apply, whether any unused allowances can be claimed. One common misconception is that inheritance tax forms are only required when inheritance tax is due. Even when no inheritance tax is payable, information must still be needed to be submitted regarding the value of the estate. Assets might include property, bank accounts, savings, investments, premium bonds, life insurance policies, business interests, and personal possessions. Liabilities might include mortgages, credit cards, loans, care fees, utility bills, and outstanding tax liabilities. Have a look at the first video in this series to learn how to value the estate. The main inheritance tax form is the IHT 400. IHT 400 will need to be completed for more complex estates and when inheritance tax is payable. The main form is supplemented by many schedules, but the ones that are mostly used are as follows. IHT 403, gifts and other transfers of value. IHT 404, jointly owned assets. IHT 405, houses, land and buildings. IHT 406, IHT 406, bank and building society accounts. IHT 411, listed stocks and shares. IHT 435, residence nil rate band claim. IHT 436, transfer of residence nil rate band. IHT 217, transfer of unused nil rate band from the predeceased spouse or civil part. Avoid rough estimates. Executors should make reasonable inquiries and provide accurate information. Incorrect valuations can lead to delays and additional correspondence with HMRC. There are certain exemptions and allowances which you need to be aware of, as they might reduce the amount of inheritance tax payable. The first one is the spouse or civil partner exemption. Then we have charitable gifts. Then we have the residence nil rate band and the standard nil rate band. If you follow the form, it will tell you about those exemptions and reliefs, and then you can apply them to your calculations. The first tip that I would give is start gathering information early and create a detailed asset and liability list. Keep copies of all the correspondence, record how valuations were obtained, review forms carefully before submission, and seek professional advice if needed. There are certain myths that need to be challenged. Firstly, not everyone pays inheritance tax. You might still need paperwork even when no tax is due. Estimates can cause delays. Inheritance tax forms can feel intimidating at first, but the process becomes much easier once it's broken down into manageable steps. If you need support with probate, inheritance tax, wills, or estate administration, please get in touch for a free consultation. I'd love to help you. If you found this video helpful, don't forget to like, subscribe, share it with somebody who might need it, and turn on notifications so you don't miss the next video in the probate series. Thank you so much for watching, and I'll see you in the next one.